Hello, 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 everyone. Good morning. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. How is everyone doing this fine Monday morning? Last Monday in August. September's coming up quickly. Good morning, Rams of Fall. Good morning, Davey. Yeah, VIX gaps up. Will it fill the gap in the VIX? Will we fill the gap from the futures last night? That is the big question. Couple targets already hit on those head and shoulder patterns. Good morning, Lauren. Good morning, Patrick. So, Options 22, what do you have? Good morning, Mike. Window dressing, last 3 days of August. Take the market back up to index head and shoulder neckline, still lighter volume. Yeah, we are. That is a good point that options 22. Again, I thank you, everyone, for being here. I really appreciate it. Everyone provides so much good information. Yes, we are at month end 2. So you can see some window dressing. We can see some little bounce trades in there. It doesn't have to make it all the way back to the head and shoulders necklines. We do have daily cycles at the bottom. They got over the slightly blasted out last Friday. Would not be surprised to see a short-term bounce. Doesn't have to happen today. Again, we're going to be watching for those gap fills. We start getting trades in those gap areas. It could be the start of the bounce. We may still, again, why I'm going on both sides is because sometimes after you get a big sell-off like we had on Friday and then a continued Sunday with this gap, sometimes we get the quick little flush move before, with some final selling coming down, and then you get the dip buyers coming in, and then we target the gap fill, and because stocks always go up, so we have to be prepared for stocks always go up. But we have hit a couple of the first targets. By the way, the only thing this morning, minor Dallas Fed Manufacturing Index, just going to really see if it stays completely negative. And then we got Brainerd speaking. Again, I don't know what they're going to say anymore after Jackson Hole. Pretty red morning pre-market. Okay, but the futures price action, besides the gap down, was not that bad. I mean, the gap down. But overall, we couldn't tried to do a few pushes lower last night, but really stabilized. Dollar, pretty strong reversal down after spiking up. And euro gaining some strength. Yen marching towards recent highs. FOMC still 66.5 to 33.5. So this is still climbing up. It was at 70 earlier, I think. So it's dropped a little. And remember, we are still in negative gamma. So if we do get buying pressure, you can get a stronger rally, especially with that vacuum from a gap. Do not be caught off guard. And yes, we do have the bearish patterns triggered, but don't be caught off guard. As I don't believe options 22 is if we do, and I am expecting at least some kind of bounce play. Doesn't have to happen today, but I am watching a bounce play with cycles at the bottom, with oversold conditions, and with month end. Remember, Monday, Tuesday, and how many days do we have in this month? 31. So Thursday's the start of September. Options. Earnings today, not much. Not much at all. Tomorrow we got Best Buy, which could be pretty telling from a consumer point of view. So tomorrow we'll pay more attention to some earnings, but not much today. Here's where we're sitting. Let's see who else is here. Good morning, Andrew. Again, thank you for joining us. I love to see new people here, especially new people that don't hide in the background. I love you guys too who do hide. But anybody who at least says good morning or good afternoon or good evening in the chat, thank you for doing that. So during the run up, the S&P sold the open and rallied in the afternoon. Maybe we'll do the inversion on the way down. Remember, on these days also, I do watch for the European close. Okay, so do keep that in mind, especially on these days, because a lot of times you get some selling pressure loosen up into the European close, and then you can get the thinner market rally. I mean, it's still the U.S. market, but it's thinner because you don't have the European pressure on there. Uh, yeah, we have spent most of the year in negative gamma, which generally happens during bear markets. Who is net long? I'm not net long. I didn't see that. Oh, wonderful. Fantastic. That's all we need. But I don't, yeah, market's probably not going to react that much to that. Good morning, Sashi. Chris, let's make some money. Again, take the setups. S&P not down. Here's what I'm keeping an eye on. This is so far a pretty decent channel slash flag pattern. So can't get, it did not fill the gap completely, almost filled it. But if we start getting above about 4,035, above 4,035, I'll be watching for a retest of the gap fill area. This is also where you can use your short-term harmonics just from the last recent swing for a potential breakdown into the open. So that's just on the other side of 50%. So where would I be watching for key support? It's a little wide, but it's 39.92 to 38.50. Got to give it a little more leeway also at the bottom. Now what I'm talking about also is we have cycles at the bottom. They were turning up on Thursday, got that hitch move on Friday. We get everybody who's followed this channel, at least if you've watched it Friday through Sunday, you know we got the double top pattern, not the first target for the S&P. Also, besides that, the full on would be 405,950, the official closing price. So that's what I'd be targeting on the gap fill. And I did give that little level, maybe, yeah, it's 40.35. 40.35. And what I again like, since this is a pretty steep sell-off, I like a break and a retest. That's my preferred. Give it a little benefit of the doubt. It's got to prove itself. And also remember, Options 22 talked about kissing the neckline goodbye, which could very well happen. We don't have a lot of stopping points. There are some key levels right around this 40.83, which is this breakdown zone over here. And you are into a clear path move. You see this? This is a very good clear path move on the 1 hour. You see it on the 4 hour. Even on the 15-minute, look at this. There's very few stopping points. The only pause areas is 47.7 to 40.83 area, and then next above that is about 4,100. So if we do, not necessarily even today, but get some trading on into this area, there's not a lot of stopping points. And with negative gamma, you can see a surprise upside move. Is this enough? I'm just watching this as a channel pattern more, so I don't even think it pulled back enough to, maybe it did. Oh, right there. Virtually nearly a double. So you could put on your double targets. I think that qualifies, and use that as a key stop raising should we start trading up into that levels. I hope you're not. Well, I mean, anybody can have their reasons. Can you go to the downside on the spiders? Yeah, we'll get to that. Again, who's net long? I don't know who you're referring to. We have the channeling pattern here. The key break level. I'm just going to bump this down. I'm watching about 12.5. 12.5, I'll start focusing on that gap fill. And again, you don't have a lot of major stopping points, especially on the NASDAQ. You have very little. If you want for an area, I'd watch also the 4-hour rotation zones for some pause areas. But based off not having many stopping points, I'm using the old harmonics. That's why they're still on here. 12.589 to 12.6 with the declining 4-hour rotation zone on the upside, with the 4-hour and daily cycles could be turning up. So that's what we're looking for. if we get that bounce. And again, the short-term play. Next target, 12,365, 40. First target on the head and shoulders, and 12,300. So those are the targets to the downside. It does feel bouncy here. I just need the confirmation. Again, we could get that little flush out move and then the bounce play. Would not be surprised to see that into the open. So why I am being patient going into the open, and it has to prove itself. And again, the NASDAQ above 1205.03. Either we have to have some substantial momentum, or I need a break and a retest and a roll back up. Again, you don't need to try to call a bottom. You call the higher probability move, which would be on that break above. Dow, stalling at the first and the 50% retracement, stalling out here. Everything sounds like a broken record. Clear path to the upside because of all that price action. Dow level. I don't need to get into the in-depth. 32,100. And the harmonics. If we push down, look at this. These are big. 31,736, and the next harmonic coming in with the next target of the head and shoulders. Not expecting that kind of push down today. If you want your minor levels, I'd use reverse harmonics. We don't have to keep beating a dead horse. Russell stalling out at the harmonic. Pretty much Russell play is on the break back above about 1887. Let's get to the Qs and the SPY real quick. So, of course, Qs, you have the gap down. The full gap play would be to 307.44. Is that right? Yep, 307.44. Remember, also on this, I put on your gap harmonics, the key support coming in at 302.31. So that's really it. And then to the downside, the levels just for anybody who tuned in late over the weekend or Friday, 296.89, 291.47. Really focus on this 286.89, and then you have another gap fill over here, 294.33. So if you're looking to set up some option positions on the bounce play. Also, you can utilize these levels. You're going to want to come down to roughly where the gap open is. Right around here. So besides that gap fill play, you can roughly, I'd adjust these when we do open and make a low. But I'd be utilizing the 12.5% and the 25%. And then your major area I'm starting to watch for is the 1 hour rotation zone for a pause coming in with a harmonic area. Spiders, do the same thing as I just outlined because you're into a clear path move. The targets on the spiders after the gap fill would be to 409.60. The break. Oh, we actually have a couple. About 407.95, then about 409.60. The key support coming in about 401.10. We're trading 402.20, 402.30. Before that, I'd be watching the gap fill play, and then I do your harmonics on there. The overall bigger targets are 395 after 401.10, 395.88, 390.66. And remember, you still have a gap down here from back at the end of July for longer term positioning on any rally. You have the clear path moves. So watch that 1 hour zone and your harmonics off the open. Oh, that's who you're talking about is net long, if he's even net long. Good morning, Anissa. Let's get to some other stuff real quick. The notes. We had this just trigger earlier, this little mini double bottom, returning to 62.5. I'm watching for where we close in relation to that 62.5, this 117.05, which was the first target on this little mini double that's already triggered. Next two targets are 117.08, 117.09. sort of interesting with that move up. Daily cycle's getting to the top, so if we get above this little level, watching, we still have a gap here. So the next target is, but we don't have a long term or a more longer term bottom yet. The next target here is 117.18 and a half going into the daily rotation zone. Crude, looking for this reversal up. It's sitting on the hands for me until we get back above the 200 and trigger this potential double. The aggressive play is we're trading here. The aggressive play would be a continued breakout back to the 200 on the upside today. Pretty substantial support coming in about 92.50. Nothing else going on there. Natty gas, it's nothing there. What's gold? Still the potential. This is still a valid potential bottom. So that's still silver. The potential bottom's not over, but it did return to that 87.5, which was the probability wise, but there's no double bottom here. So if I see anything else there, shake and bake still in play. Watching for that close below the midpoint, but found support at the other end of the horizontal channel is 356 area. So still nothing there unless we get the breakdown move from there. Dollar index, we're getting that little toppy play against this minor harmonic I put up there, 109.42. But nothing. This is a potential double top. So really sitting on the hands unless we rotate back up or unless this double top triggers on a close below, and that would have to be a daily close below 108.61. VIX, if we start breaking below today's low, we'll get into slightly more moderate bullish mode, which today's low 2683. By the way, that custom index I have for mega caps also on Friday triggered a head and shoulders pattern. So even on a bounce play, watching for a rollover play in that mega caps, and that's Apple, Microsoft, Tesla, Amazon, and Google. US dollar, Japanese yen finally got back to 87.5. We are in double top territory, but the next target 139.939. 10 years starting to get some more pressure on it again. The 10-year JGBs after this double bottom. So I am keeping a close eye on that again. I said again twice. Euro, potential double bottom. It needs a daily close above 100.90. Bitcoin, if we do get that bounce, watching for the bounce play in Bitcoin back to the daily rotation zone, but then another rollover play, we should still favor a return to at least 18,523. Tesla, looks like we're gapping down, fulfilling the odds once we close below the 62.5 that we'd hit that 87.5 to 100. The bigger thing is we need to close below 279. On any bottom being put in the NASDAQ and the S&P, I'd be targeting the gap fill play to Friday's close, which is 288.09. Market makers have a slight long bias generally in a bull market right now. I would disagree that they are typically net long in a market like this. They're more so hedged and might shift to intraday long or short, but they're more so hedged in markets like this. There's your Tesla, and still you got the double top still in play even with that gap fill. So keep that in mind. In this market, these kind of markets, there's not the overall minor long bias. It would be a short-term bias based off the order book, trying to find a bottom. With that, what else? I don't think I missed anything really. Let's just peek in. Apple with this gap down. Again, Apple looks like it's going to gap below its 200 again. Let's see, the 200. Oh, no, it's going to gap above that, sorry. The first target on Apple, 161. So we still have not hit the first target, but are going to be targeting if we do bounce that gap fill play to Friday's close, 163.62. Real key is when Apple breaks that 200, and we do have another gap. So I'll be watching after that for another rollover play in Apple. Microsoft. I should have mapped this out too. Let me just do that real quick. I'll fix that in a bit. It's going to give us roughly the target areas. Microsoft 264.50 with this breakout zone right there. We're trading above that. First target, though, on any bounce would be that gap fill play, which would be to 268.09. And if we do, some of this, we might very well return to a number of these mega caps to the breakdown zone and the neckline on these head and shoulders, and then roll over, especially with daily cycles at the bottom. So don't be caught off guard with that. Yes, QE does double. QE does double in September. September's going to be a very interesting month. Once we get Labor Day out of the way, remember Labor Day next Monday, and we might have some thinner trading after month end going into Labor Day, and we have non-farm payroll Friday. So Thursday, Friday are going to be very interesting, especially Friday with non-farm payroll and potentially thinner markets with people extending the Labor Day weekend, although the bigger dealers will probably be in their seats for Friday morning for non-farm payrolls and then bail shortly after that. NVIDIA, Paul, and then I'm going to wrap this up. You know what? I appreciate everybody being here. I really do. NVIDIA, you had that double top trigger. So overall, we're in bearish mode. Right now, also trading that 62.5 level. Going to be watching, even though we're already bearish and close below there. There's two separate probabilities associated. Do not make that mistake. SMH is also bearish. Again, weekly sector overview. Please watch it. And also Jim Iorio podcast. They both dropped yesterday. The key resistance on any bounce play, first thing would be your close of 162.60 for the gap fill, and then the breakdown zone. Breakdown zone 167.24. This is sort of a messy breakdown zone because you have a range here. You have a key close. 165.33 to 168.33 would be a major rollover zone for me. You still have this, like, so many things are the same. It's going to be on a rally. Look for a short entry. You're welcome, Ramsafal. You're welcome, Chris. You're welcome, Fanil. Thank you for typing something in. Welcome, welcome, welcome. Thank you. Again, all those comments are very nice. And let's just trade safely. This is going to be an interesting week. Even though we're longer term bearish again, or more mid-term to longer term bearish, keep looking at the short-term price action for the potential bounce play. Just peeking in on this into the open. 40.35, still key level going into the S&P open. You're welcome, Anissa. You're welcome, Paul. I'll be here. Unless something major happens, not expecting it. If it's a rally, I'm not going to be on at lunch. Other than that, I will be definitely back here this afternoon. And we should get some more clarity for the next 2 days going into month end. You're welcome, Eric. You're welcome, Andrew. Lauren bounced to 403.92 in what? The S&P SPY? 403. It's just, I wish I could do the gap. I don't want to. I got to do stuff going in the 402.24. What's the gap harmonics? I'd be watching this 403.78 to 404.17. Fine tune it if that makes a new low. That's my first target area on the gap fill play for the SPY. I will chat with everyone later. Bye for now.